Hi guys, have you ever heard about the term dividend investing? And did you know it was the best method for you to generate cash? A method that is used and loved by famous investors around the world. And if you love cash like I do, then this video is especially made for you. So if you're interested in learning investing, I invite you to subscribe to this channel and smash that like button to help me grow this channel further. I'll be talking about four main aspects. And the first, I'm going to be explaining to you what is dividend investing. The second, I'm going to be talking about some key ratios that you want to be checking before you start your very own dividend investment strategy. Third, I will be sharing with you how do you know when you're going to get paid out for these dividends. And last but not least, I'm going to give you a full list of companies that have been paying out dividends for the last 25 years. At the end of this video, I'll be giving you out a white paper with all of my notes, so you don't need to take any notes at all. What are dividends? Well, simply said, dividends are a share of the profits that the company chooses to divide with their shareholders. And this profit is paid out in cash that you can use for anything. Pay out your bills, reinvest, do whatever you want with it because it's your cash. And this is exactly why so many investors like this type of investing, because cash is king. And the remaining amount of profits that the company keeps within the company, that is what's called the retained earnings. So let's say a company earns $200 profit, and they choose to share this profit with their shareholders. And in a case like this, what they could be doing is they could say, I want to share $120 of this $200 as profit with my shareholders. And now, let's say they have 100 shareholders. How would that be divided? Then you have the $120 dividend that the company needs to pay out to their shareholders divided by the 100 shareholders, which is $1.20 per shareholder. And that 120 is what's called the dividend per shareholder. Now, the remaining $80 that's within the company, this is what's called the retained earnings. This is what the company chooses to keep within the company that they can actually use to reinvest into growth or into other aspects to help the company grow further. As in some cases, when a company chooses to keep all of these earnings within the company, that's actually better for their growth. A good example of this is Amazon. They have never paid out a dividend to any of their shareholders in the last 10 years. But the company has been growing like crazy. So what this company has been doing is they've been taking that earnings that they've been getting and reinvesting that into higher growth, which will benefit the shareholder over the long term. So just to say, if a company does not pay out a dividend, it does not make it a bad company. Usually companies that pay out dividends have reached their peak of growth and don't have a substantial amount of profit that they can reinvest to actually keep growing the company further. And these are companies, for example, like Coca-Cola. Coca-Cola is a perfect example. It's in all of the countries worldwide and their growth is very limited. So for them to keep all of their profits within the company, it doesn't make a lot of sense. They want to give a certain amount of profit to their shareholders because they already achieved their max peak of growth. But that makes sense, right? Exactly. So a company that makes a lot of profit also can pay out more dividend. And a company that makes less profit can pay out less. And that makes sense, right? And famous investors like Warren Buffett are famous for investing into dividend stocks. Almost all of his stocks are actually dividend stocks. And he makes a whopping $4.7 billion worth of dividend payouts. And that is absolutely insane. How do you know if a dividend stock is actually a safe investment? And how do you know they're not going to cut the dividend? And what I mean with cut the dividend is that they're going to reduce the dividend or not pay out the dividend at all. And you need to be careful because recently what's been happening during the coronavirus is that a lot of companies have been cutting or scrapping their dividend altogether. And there are ways for you to safeguard your investments by checking some key ratios. And this key ratio is what's called the payout ratio. And this payout ratio basically indicates the percentage of profit that the company is paying out to their shareholders based on the earnings that the company has. Let me give you an example. Let's say a company earns $100 and they are going to pay out their shareholders $110. Their payout ratio would be $100 earnings divided by $110 payout in dividends times 100, which would be a payout ratio of 110%. And when a company pays out more than what they earned, that's something I want you to keep an eye on, because when a company does that, that means they're going to either need to take out more debt or they're going to pay out it in some other way that they did not earn, which is not going to be good in the long term. And let me emphasize, what is a good payout ratio? A company that pays out between 65% and 80% of their earnings as a dividend is considered a good payout ratio. Lower means that they're investing more into their growth. Higher means that it's at risk of being cut or scrapped. So be careful when looking at dividend stocks. Now, on most websites, you can actually find this quite easily. If you go to your brokerage account or your investing website, you can actually find it under the dividend section and you'll see the ratio payout. So make sure to check that before you invest into any stocks. Now let's dive into the fun part. And that is when you get paid out for your dividends. When does the money come into the account and you can go splurge on some new investments that you've been looking to splurge on? Because when you splurge, you want to make sure you splurge on investing. There are actually some key dates that you want to keep in mind. And these key dates will help you prevent of making any mistakes. When I started out investing, I actually bought some stocks on the wrong date and I missed out on a good chunk of dividends. And that's exactly what I want to prevent you from happening, because that just is really sad not to get paid out for something that you were expecting to get paid out on. So there are actually 5 key dates that you need to know about when you're start with dividend investing. The first one is the declaration date. This declaration date is when the company board announces when they're going to be paying out the dividend. The second is the in-dividend date. And this is a very important date. This is the last day you can buy a stock to get the dividend paid out to you. This is exactly not the date that I bought my stocks on. Third, you have the ex-dividend date. And this is when the dividend is no longer connected to the stock. This is the old dividend. And the new dividend is going to be awarded to that stock. And on this date, I bought my stock because I thought I was going to get paid out on the ex-dividend date. You do not get paid out if you buy a stock on the ex-dividend date. Let me stress that you do not get paid out on that. And fourth is the record date. This is when the company records which shareholders they need to pay out the dividend to, and you actually become a liability for that company. And fifth is the most important date of all. And this is the payment date. This is when you're going to get the payment of your dividends, which is a great day because that's the first day you're going to get cash for not doing anything at all. I guess these are the most important things that you want to take a look at when you start dividend investing. And now let me help you out a little bit further. I'm going to give you a list, what's called Dividend Aristocrats. Dividend Aristocrats are companies that have been paying for the last 25 years a dividend overall. Now, this does not mean that because they're a dividend aristocrat, you should not check these key ratios that I explained, because some of these dividend aristocrats are actually in danger of not paying out. But what I want you to do is I want you to take the time to review them and look for these ratios yourself. Now, these are some of the major companies out there, and most of these companies you already know. So these are going to be household names. So please take a look at them for yourself. So here we go. I'll add a full list right here on the left side from me so that you can take a look at them as well. And guys, if you're interested, I linked up above here to the white paper with everything included there about dividend investing and dividend aristocrats. So if you're interested, please take a look there. Also, guys, I'll be showing you some key factors that I want you to take a look at on the balance sheet with a video right here. So if you're interested in learning about that, please click on that video and it will help you analyze your stocks so much more in depth. So if you're interested in that, this is the video you want to be watching next. And of course, guys, if you like this content, please consider subscribing to this channel, smashing that like button, and leaving a comment below in the comment section with any questions that you might have. I would appreciate it a lot.